just business news, we're news for business people. Good morning. Welcome to Bloomberg Quint Live. I'm Menaka Doshi.
Good morning. I'm Ira Jubal.
And I'm Neeraj Shah. You're watching Indian Open right here on Bloomberg Quint.
All right, let's get straight to the headlines. Good morning, guys, to all of you and to our viewers. Asian markets trade cautiously this morning as central banks across the US and Europe announce rate hike decisions today and tomorrow. Retail inflation accelerates to a 15-month high of 4.88% in November, whereas factory output for the month of October slips to 2.2%. Indigo's promoters will sell nearly 3% stake in the open market today. Those are some of the key stories to watch out for today. But first up, the market setup.
Yeah, well, it doesn't seem like there'll be a surprise, quite frankly. Yesterday was showing how we are likely to trade ahead of two key events. One key event ahead of the globe today, and then, of course, for India specifically as well. So we'll start off on a flattish note. The Asian markets are showing that. The SGX Nifty 2 indicating that we'll have a very, very flat start in the session today. Also, and if you just look at what happened in trade yesterday and day before, there's a sharp spike up in volatility, a bit of a revert to what it used to trade at ahead of the pullback that we saw starting last Thursday. So a big spike in volatility in trade over the last couple of sessions. And Nifty Bank in particular saw substantial short build up to the tune of 13 or 14 odd % ahead of the CPI numbers coming out, just on the expectations of the CPI numbers being high enough. They were higher than what we were working with, and we'll of course talk about that in first word in greater detail. So very, very interesting to see if there is further short positions being built up in the bank Nifty or no. Remember, for the index to go up or go down, banks need to participate either direction. They've not been participating on the upside. We've seen some short build up there. I think banks will remain a crucial sector to watch out for in the session today. Couple of key verdicts likely on the legal front as well, and that might impact specific pockets. So the pet coke ban hearing likely today. We may have a decision today. Essentially, it was deferred for a couple of days. We might have it today. There was a bit of positive comment coming in for cement companies or others to use pet coke not as fuel but as an ingredient, and it depends really as to what impact it has. But watch out for this. It will have a big impact on the cement companies today. The Unitech plea, which was deferred for the last couple of days, would be heard today. Maybe we'll see some outcome there too. Remember, it's a stock that went up for 2 consecutive days before correcting yesterday. Could be an interesting one from that stock specific perspective. And amongst specific companies that will react or that could react today, let me rephrase myself. Airtel, the DTH stake sale. I know a lot of comments have come in about it's at a great premium or otherwise, but if you look at the valuations at which it's done, and unless I'm very wrong, it's about a couple of percentage points or maybe 5% at best as a premium to Dish TV on account of superior ARPUs, as Somany was telling me. So it's valued at par, I presume, but let's wait and watch if Airtel has a bit of a reaction. Century Textiles could be an interesting one as well. That gets about 600 odd crores. Let's see if that one has a bit of a reaction to that news today. But I think two stocks that could have a sizable reaction. One is Punj Lloyd, wherein it's won orders in Myanmar worth about 1,200 crores. Typically these days, companies which get large orders tend to react disproportionately. Let's wait and watch if Punj Lloyd reacts. And Talwarkars, amongst other companies, came out with a very strong Q2 on all parameters. This one could react in the session today positively, I might add.
All right. Let's get to first word then, and what we have for you on first word today.
Yeah, let's do that. But Minka, just before we can do that, if I can just get in Kathleen Hayes, the view, because Fed is an important event today. The key is whether we'll have a hike. Yes, we will have a hike. That's the consensus. But what's the future looking like? Kathleen Hayes of Bloomberg News joins us with all the details and all that brokerages are expecting the Fed to do over the course of the next 12 months as well.
We know that a rate hike is expected for December. This is a two-day meeting. It started on Tuesday. It ends on Wednesday. It's the last one of the year. It's the last one where Janet Yellen will have a press conference. And if for some reason the president decides to confirm Jay Powell early, don't think he's expecting that. Janet Yellen she'll step down once he is sworn in. That's what I'm trying to say. So a lot of interesting stuff potentially coming out of this meeting. First of all, rate hike. I think that's interesting. It may not be suspenseful. WIRP, WIRP, World Interest Rate Projections on your Bloomberg. Here you have it up in the corner. Remember just a couple of days ago, they were at 98%, but boy, oh boy, everybody's all in. They're not going to bet anything but yes, rate hike in December. Now, what else is interesting here? Of course, it's a summary of economic projections. It's the Fed's forecast. Each member of the FOMC submits their forecast for GDP, unemployment, and inflation, and those are updated every 3 months. So the last time we got the SEPs, that was in September. This is December, so it's time to update them again. And importantly, what comes out of the SEPs is the dot plots. And the dot plots is where we could have a little drama. Because right now, markets, they are saying 2 rate hikes in 2018. That's up from just 1. They're getting a little more believing in the Fed's commitment to inflation and gradual rate hikes. But there's people or banks like JP Morgan, Goldman Sachs, who say you could have 4 rate hikes in 2018. So let's just kind of refresh our memory. Look at the dots with me. DOTS go. And what you can see, here's the 2017 dots. Very broad consensus in the second half of the year for 3 rate hikes. But when you look at 2018, here's the consensus for 3 in 2018 as well. But you can see it's much more diverse, much more divided. Chris Lowe from FTN Financial with us earlier said that he thinks, if anything, you're going to find a couple of people down here drifting up higher to the 3. Maybe, but he said it would only take 3. See, there's 6. Only take 3 to build a consensus, a small consensus, but a consensus nevertheless for 4 rate hikes. So that's, I think, why there is a very important amount of drama around this. And finally, of course, Janet Yellen is the last press conference, and we're going to want to get a sense of how she describes the consensus, the FOMC, as she, swan song, whatever you want to call it. We know that she's led them very effectively, and at least at the beginning, when Jay Powell takes over, presumably he's going to walk in her policy shoes, at least at first.
That's what to expect from the Fed later tonight. But of course, as she pointed out, Kathleen, this will be the last press conference that Janet Yellen will hold as the head of the Federal Reserve. And it'll be interesting to watch for that, at least, if not for the potential rate hike. Now, what do we have for you on First Word this morning? A quick look at the constituents that have contributed the most to the spike in retail inflation, the impact it'll have on bond yields. Zero is going to break all of that down. And dare I say, a commentary, at least, on the IIP numbers or the factory output numbers that we got yesterday. We've got the Bharti group seeming to have got a good valuation for its DTH business. Neeraj flagged that off, and Somany is going to get you more details on that. And finally, we're going to end First Word on what marquee investors Rajiv and Dolly Khanna have been buying and selling in the second quarter of this year. So watch out for that celebrity portfolio, if I may call it that. But let's start off first with the economic data we had out yesterday. It was disappointing all round, a double whammy, as some might call it. On the one hand, you had consumer prices in India rising to a 15-month high in November, whereas IIP for the month of October slowed to 2.2%. Ira standing by to tell you what all of this means and what does it mean, especially for government finances as well as for the bond market. Ira, both numbers, I think disappointing without a doubt.
Absolutely. The growth inflation mixes are looking worse and worse. I'm going to focus a little bit more on the CPI numbers than the IIP. We will talk about IIP as well. But pull up the CPI chart. I mean, everyone expected a number which was higher than 4%, 4.2, 4.3 was the kind of forecast being put out there. But a number at 4.8% was a little bit of a shocker. So you've got a 15-month high on inflation. Yes, there are various factors playing into it. There is a base. We always knew there was going to be a base. But actually, the pressure on inflation has been fairly broad-based this time. So those who are going to, try and dissect this number to say, oh, it's not that bad, they're going to find a tough time to, pinpoint one particular aspect which tells you that inflation is not starting to rise. CRISIL had broken it up quite nicely, so I'm going to borrow from them. So on a month-on-month basis, food inflation was up 250 basis points, fuel inflation was up 110 basis points, and core inflation was up 40 basis points as well. Even within core, yes, there is the HRA component, which most people say is statistical, but still, even if you take that out, other components such as personal household services, etc., all saw an increase. So you're pretty much across the board board saw a pickup in inflation and more than what you would have anticipated. So not good news at all. Certainly not good news for the bond markets, although some would say that perhaps the bond markets had seen this coming, because this week the increase in bond yields that you had seen was slightly inexplicable. You couldn't really understand why the bond yields were continuing to rise, even though policy really had not disappointed in any front. So perhaps the market had a sense of the kind of CPI number you were going to get. Just pull up first the bond, actually, let me just talk a little bit about some of the factors at play in the bond markets. We've talked about fiscal for sure. Now is higher inflation. There is crude prices which are continuing to rise. There's global bond yields which are rising. The last factor I just want to bring up, because a lot more traders are now talking about unwinding of excess SLR holdings. Remember, when liquidity was very easy, a lot of banks had gone in and bought bonds well in excess of their mandated SLR limit. And now it seems as liquidity is starting to tighten, as there's some pickup in credit demand as well, there is an unwinding of those SLR holdings as well, which is adding to pressure on the bond markets, particularly on the long end of the curve. Which brings me to the next chart. If you look at the next chart, it's interesting to see what really is moving. There are three lines on that chart. The yellow line is the 10-year bond yield, and we've all been talking about how the 10-year bond yield has been rising, and it has risen to levels which most people would not have anticipated. Even a couple of weeks back when I spoke to people, everyone said 705, maybe 710, but you're now closing in on 720. But look at what's happened to the other two lines. The white line is the 91-day T-bill. That has actually not moved up a heck of a lot. So you are seeing the curve steepening. Most of the upside has come on the 10-year bond yield, which, well, if you look at traditional theory, it probably suggests that there's higher growth and higher inflation coming up. But it also suggests what is happening in terms of the supply-demand dynamics, where perhaps there is excess supply on the long end, and that's why the yields on the long end are rising more. The other thing I want to point out is if you look at the blue line, that's the corporate bond. That's the 3-year FIMDA corporate bond. And the spread between the 10-year and the corporate bond has actually not risen. The reason I'm making that point is that if there was excessively tight liquidity conditions, and if overall there was negativity in the bond markets, you would have seen the spread between the 10-year, which is the risk-free rate, and the corporate bond rate starting to rise. That has not happened. So I think there are various elements at play in the bond market. It's not all linked to just the CPI numbers or an expectation that perhaps come next year, the RBI will have to consider a rate hike. Let's get more views on this and also the IIP numbers with Saugata Bhattacharya, Chief Economist at Axis Bank. Saugata, good morning. Thanks so much for taking the early morning call. Saugata, just let me first start by asking you for your analysis of the CPI numbers. What did you read into it? All right,
I think we've just lost that line
too.
While they retrieve, Saugata, I just had a couple of questions to ask on the inflation contributors. I know that you said core has shown a marginal increase and HRA may be a statistical sort of aberration there. But how concerned should we be about both food and fuel?
Both. I mean, so food again is vegetable. There was a steep upside in this particular month. There's some talk that the next month's vegetable increase may not be that, that dramatic. But nevertheless, you can, at least the RBI never ignores food inflation, because that's the first thing that feeds into inflation expectations. So they will not avoid looking at food very closely. And if you look at the month-on-month movement in the food category, barring pulses, everything is moving up on a month-on-month basis. Pulses is the only category which is now still showing a month-on-month decline as well. So pretty much across the board, whether it's the sugar or confectionery space, which is starting to see an upside, whether it's vegetables, whether it's eggs, everything has seen a month-on-month upside. While we get Saugata back, if we can get him back, let's just mention the IIP numbers as well. And the IIP numbers were disappointing too. You had 2 months of good numbers, and the fact that it flattened out this particular month was a little bit of a disappointment. But then, IIP is what it is. It's volatile, and it doesn't always correlate to what's happening in GDP, as the point has been made. Saugata is back with us. Saugata, good morning. Sorry to be troubling you early morning, but wanted to get your analysis on what's happening on the CPI side, Saugata. What did you make of the breakup?
I thought you're a bit dire there. I mean, you'll really scare the bond markets.
Oh, really?
No. It's not that bad. Initially our forecast was 4.5, so we were a little bit better than the market, and it came in as a surprise at 4.9. But remember that 29% of this rise, of this 4.9, is from two commodities, tomatoes and onions. 29%. So 1.4 as a contribution to that 4.9. I know we do this jugglery, and I know that the RBI is not, the MPC probably is not convinced that, I mean, you know, this is this time, that is that time, and so on. So what we are focusing on the headline. But the point is that, I mean, with 29% of this contribution to this thing coming in from two commodities, and these are commodities which are likely to retrace back in the next couple of months. So it's not going to be that bad. I mean, our sense is that we'll probably get another 4.7 odd percent for the month of December. But finally, I think inflation will come into that 4.3 to 4.7 range in Q4 that the Reserve Bank, that the RBI statement talked about. So it's not completely out. It was a surprise. I mean, we hadn't anticipated that big a jump in vegetable prices. But that's the bottom line from this.
Saugata, did the bond market already anticipate this? We've seen yields go up.
I have a feeling. There was talk in the market that inflation would come in at 4.7.
Okay.
There was chatter in the market. So I think but I think a whole bunch of factors contributed to the sharp rise in yields. I think the illiquidity premium from the old paper, the rise in oil prices, etc. So I think a whole bunch, and the Fed, the Federal Reserve, the U.S. yields rising another 2 basis points or something. So all of them came together, but I have a sense that yes, the market somehow anticipated.
So you would expect another sort of move up in yields based on this CPI number?
I think that's something that you can expect. Of course, the Reserve Bank has come out with the opening, with the auction of the FPI limits. And that's something I guess that they would have to do. Normally, this is done at the end of the quarter. But this came in yesterday. So I think, but even with that, I think there will be a slight bearish tone in the bond markets.
Okay, quick word on IIP, Saugata. Anything notable there?
IIP notable, yes. I mean, good and bad news. We got that one very right. I mean, 2.2%. So that was anticipated. But the internals of the IIP was peculiar. For one, the slowdown came in largely from the mining sector, as you would have seen. We had anticipated a 3% growth. We got a 0% flat growth. So that's one thing. I think that's to do with the untimely rains. I think that they interfered with mining. But the 7.7 consumer non-durables growth, which people are trumpeting about, if you factor in if you take out the antibiotics and the medication and antibiotics component that has become very volatile.
Digestives, Saugata.
Digestives, I'm sorry. Digestives and antacids.
Not the biscuits, I'm sure.
Yes.
Not the biscuits.
So stop the biscuits. Stop eating outside. So if you take that out, so that's not good news, because then consumer non-durables, FMCG, is actually minus 1.1. Yeah, so I mean, so good and bad in the IIP, but this was anticipated, I think, because of the festival season. I mean, don't take this one very seriously around the festival season and so on. That's always you need to take a moving average of 2 or 3 months. So let's see what the next one comes in about. But it's not terrible. I mean, the overall mix of these two numbers, it's not as dire as.
Saugata, if it wasn't for tomato, onions, and digestives, we'd all be in a better place. Yeah. Before we say goodbye to you this morning, I want to sneak in a quick question. This is Menka here.
Yes,
I know there is no direct correlation between what we're seeing in the US and what we're seeing in India.
Right.
But if you track producer prices in the US last night, you got a larger than anticipated increase.
Right.
And most people are attributing that to the back of fuel prices. So yeah, so my large question to you really is, that is the known unknown, right, for the next 12 months from here on. Commodity and fuel prices, so to speak, the upturn that we're seeing.
Right.
Sufficiently worrisome enough for you, or worrisome is maybe a strong word, but for you to think that the door has firmly closed now on any potential rate cut by the RBI? And if anything, either we look at a status quo from here onwards, or maybe even a move up?
Look, so for one thing, the first question, the correlation, I think this is definitely the effect of fuel prices, energy prices. In that, I'm not totally pessimistic about oil prices moving up and up and up. I mean, these may be the last words of a wise economist. But having said this, I think that gap between the WTI and Brent that had opened up in the last month, I think that is beginning to close. And once that happens, I think shale will come in. So you're not going to go back down towards that 55 range, not before the winters end in the West. But I think more or less prices on energy are capped. I'm not very sure about metals prices. Metals prices might rise a little bit more, but maybe just about 5-10%, not more than that. So I'm not completely, not totally pessimistic about commodities prices. But having said this, look, anyway, even before, we were anticipating something like a 25 cut from the Reserve Bank. So, I mean, it's nothing, a very, very shallow cut. So it's not as if, so that might have been a little opportunity for some traders, but nothing to do with the real world. Real world, there's nothing that is happening. I think liquidity needs to be tracked very carefully, the effect on market interest rates. Overnight rates, near-term rates, and then on to the medium-term rates. I think that needs to be tracked. And even there, you'll see a tightening of liquidity in this quarter and spilling over into the next quarter. But I think there's ample liquidity, latent liquidity available in the market. 2 lakh crores, 2 trillion worth of forwards are going to mature over the next year. About 1 lakh crores, 1 trillion of the market stabilization scheme, that's likely to mature. So I think liquidity will be more and less ample. It's not going to be a huge problem, and the Reserve Bank will come in. I think we'll continue to keep, if not at the magnitude that we had before, FPI flows. So my sense is rate hikes for the next year and a half are out of the question. I think growth is far too fragile. Yes, at this point in time. So rate hikes is out of the question, but rate cuts, yes, I agree with you that, the probability that we had ascribed 20-25% of a rate cut, I think is more or less gone for the time being.
All right, Saugata, thanks so much for joining us this morning. Key insights into what's going on in the macro this morning. Let's shift focus from that now to that big deal. New York-based private equity firm Warburg Pincus to acquire a 20% stake in Airtel's DTH arm. The deal is valued at about $350 million. Somit Sarkar standing by with more on that deal and what it means for Airtel, how brokerages are viewing it, and what it means for the DTH market as well. Somit.
So Bharti Airtel currently owns around 95% in this DTH arm, and they will be selling 15%, and the remaining 5% will be sold by another promoter group entity. Now Bharti Airtel will get close to $263 million from this transaction, and this deal values the DTH arm of Bharti Airtel at close to around 11,300 crore rupees. A few details about the DTH business of Bharti Airtel. Now Airtel's DTH arm has close to 13.5 million subscribers. That is around 20 to 21% of the total subscriber base. It generated a revenue of close to 1,800 crore rupees with a high EBITDA margin of around 37% for the first half of financial year 2018. Now the average revenue per user, that is ARPU, was around 233 from this business, and Airtel so far has contributed close to around 7,500 crore rupees in this DTH business. However, the contribution of DTH business to the consolidated Airtel is very less, as it contributes around just 5% to the revenue and EBITDA. Now, brokerages have also given a thumbs up to this deal, because Macquarie is saying that this valuation reflects Airtel's strong recent performance in the DTH business. And according to Macquarie, this deal is at a premium of around 30% to the combined Dish TV and Videocon entity on enterprise value to net subscriber metrics, and if you compare it with Dish TV on a standalone basis, then it is at a premium of 20%. But when you compare this deal on enterprise value to FY17 EBITDA, which is a much more important metrics, it is at a premium of just 2% with the combined Dish TV and Videocon entity. Also, Morgan Stanley is saying that the deal values the DTH arm marginally ahead of their estimates, and the fund that they will be getting from this deal could help Bharti Airtel to spend more on their capital expenditure on the Indian wireless business.
Okay, thanks Amit for those details. I just wanted to make a quick comment here before we pass it on to Yatin, and I know he's got this celebrity portfolio coming up, but I think interesting things to watch out for in the DTH market. I don't know what this deal amounts to by itself, but there was rumor and talk in July this year, and a couple of newspapers reported it as well, that Tata Sky may in fact be looking to sell its DTH business or a substantial stake to Fox. There was also talk that it might look at combining its DTH business with Airtel's. We've already seen the Dish Videocon combination. The enhanced stake sale to Fox currently has a question mark over it, because Fox itself seems to be in the process globally of selling out its business in India, including a large chunk of its global business to Disney. So it's interesting to see what this DTH investment for Warburg Pincus will mean, and how things will move here on in this market. It's a a few key months of activity to watch in the DTH market. So beyond that, there's no other way to tell what will happen next. But we're all waiting to hear from that Fox-Disney deal, which, if it happens, has big implications across the world and also here in India, because it involves Star India here, and Fox's stake in Tata Sky. So all of that. Just wanted to point out that as a quick end note to that.
No, big implications indeed. I was speaking to somebody who's an employee in Disney saying that, hey, we guys in India have 500 employees, Star has 3,500, and we are going to acquire them. It will be very interesting from an Indian perspective if this deal indeed goes through.
No, there are a lot of questions on that deal. Disney News, of course, there's ABC and all of that, but how is this going to move on? What happens to Star India?
More
so, we'll wait and watch to see if that global deal does get done.
True. But moving on to the last element on First Word today, Chennai-based couple Rajiv and Dolly Khanna, they need no introduction. They've made a name for themselves in the Indian equity markets, earning Rajiv the title of Sultan of South amongst marquee investors. He doesn't buy much on his own name, though, which is why it reflects on his wife's name, and therefore Dolly Khanna is the more popular name. But what have the couple bought and sold in the last quarter? Yatin is standing by with that list. Yatin, what's on their portfolio?
Good morning, Neeraj. Of course, you were talking about Dolly Khanna and how his husband Rajiv Khanna really runs the entire investment process. Lucky to have a husband like Rajiv. But we will discuss about Dolly Khanna's reported portfolio, select stocks, and the change which we have seen in the last 2 quarters, which is basically we are comparing the data of second quarter exchange filings to the first quarter exchange filings. But before that, just to know, Rajiv Khanna sold his ice cream business to Hindustan Unilever, and the money that he got from the deal and the transaction was used to make a stock market investment. So somewhere in 1996-97, he started his investment journey in the markets. Of course, he's a Chennai-based investor, so he typically looks at various value-based mid-caps. Right now, the reported holdings indicate that his total portfolio value as on yesterday's closing prices is close to 750 crores. And if you look at it, bulk of it, really comes in from a couple of 2-3 stocks. Nearly 1/3 of the holding, which is reported on the stock exchanges, 1/3 of that is Rain Industries, which is worth 255 crores. So close to 2% stake in Rain Industries is worth that much. Of course, Nilkamal and Tata Metallics, these are the top 2 holdings apart from Rain Industries for Rajiv Khanna as well as Dolly Khanna. And interestingly, this time he has in the second quarter increased its stake in various sugar stocks, and that formed close to 40 crores in terms of value on the reported holding front, which is basically Dhampur Sugar and Dwarikesh Sugar. From the first quarter to the second quarter, he's increased his stake marginally by 10 bips in each Dhampur and Dwarikesh. So the bullish stance probably of Chennai-based investors, both Dolly Khanna as well as Rajiv Khanna look to buy sugar stocks, and also Rain Industries, wherein he increased the stake substantially, almost doubling it to a level of close to little over 2%. So Rain Industries and sugar stocks is what he has added as far as second quarter, which is September ended, holding reported on the stock exchanges. Apart from that, his recent buys includes Amar Jyoti Spinning, Manappuram Finance, Ruchira Paper. So these were the stocks wherein he did not have any holding reported in the first quarter, but in the second quarter, the holdings on the stock exchanges were little over 1%, and that is the reason why how we can find out these reported holdings. Apart from that, we have IFB Agro, LT Foods and Tata Metallics, wherein he has trimmed his stake marginally, not substantially, but marginally, especially in Tata Metallics, which has been his key holding. So, some profit taking is what he has done as far as Tata Metallics is concerned. Apart from that, have a look at the holdings, which are reported and, wherein the stake has fallen below 1%, and probably we assume this will be an exit. So if you look at GNFC, Trident Group, which is basically Trident Limited, and Akshar Chemicals, these are the 3 stocks wherein Rajiv Khanna's holding fell below 1%, and that is the reason why we believe that he might have exited all of these 3 counters as far as the second quarter is concerned. But on an overall basis, the kind of appreciation that we have seen in Rain Industries and the kind of appreciation that has got into the portfolio, substantial gains coming in for Rajiv Khanna and Dolly Khanna, whose reported portfolio today stands at close to 750 crores.
Okay, thanks a lot for that, Yatin. But that's all that we have on First Word for the day today. More coming on a bit later on. We'll discuss the investment opportunities in the Indian markets with Deven Sangoi of Aditya Birla Sun Life Insurance. Take a check on microfinance and, of course, the scare of these rising rates with P.H.Ravikumar of Bharat Financial. And the business outlook with Abhishek Somany of Somany Ceramics. Yesterday, the whole home building material space was active. Abhishek Somany joins in to talk about what's the kind of growth that the space could look at over the course of the next few years. But for now, full tilt towards the day's trade. Start off with what's happening in the derivative space and the setup thereof. Agam Vakil is standing by. Agam, good morning.
Good morning, Neeraj. Well, weak cues coming in from the futures and options space because we have seen some amount of shorts building up into the system, especially when it comes to futures. Starting off the Nifty, the index moved down by as much as 0.8%. We saw near a 1% increase in open interest towards shorts. And, well, the picture is a little more magnified when it comes to the Bank Nifty. So about 13% added towards fresh shorts as far as the Bank Nifty futures go. But considering that, we've also seen an increase in the India Volatility Index, which has moved above the mark of 15. That this may be a concern for some traders out there who are long in the market. But the put-call ratio has also come off to 1.26, considering the fact that we've seen the Nifty also come off. And that said, in terms of changes in open interest, we're looking at 10,000 call, or rather the 10,000 put, which has been looking at more accumulation. This is perhaps where we can see a near-term, base building. And on the upside, of course, a lot more writing in calls such as 10,300, 400, and 500. But in terms of some stock futures that I'm watching out for, we have Oil India, which has seen, well, some fresh shorts building in, considering near 17% increase in open interest. And we're also looking at fresh shorts in Hexaware Technologies with about a 14% increase there as well. But short covering coming along when it comes to PC Jeweler, where the stock has moved up around 2.4%. And, well, the open interest has declined by as much as nearly 9%. So we'll be watching out for these as we move into today's day of trade.
Okay, thanks a lot for that. This has been very active the last few days, Agam. Thanks for pointing that out too. And let's ask Abhijit Phatak about that and more. He's director at Definite Solutions, joins us right now on the show. Abhijit, good morning. Thanks so much for joining in. Fantastic call on Reliance. I'll talk about Reliance. I'll talk about PC Jewelers as well with you, Abhijit. But firstly, talk about the positions in the Nifty Bank, because there was a fair bit of short build-up ahead of the CPI numbers coming out. Now the CPI numbers look slightly wobbly as well on the higher side. Do you think that there could be further short positions on the Nifty Bank? And if so, what are the levels that you'll be watching out for here?
Good morning, Neeraj. I'm watching 2500 to 25150 on the Bank Nifty, which might act as a support because yesterday's low was 25160. So as long as 2500 on Bank Nifty futures and 10,200, 10,230 on the Nifty spot, if these are intact, I believe the market can reverse from there and can go up maybe towards 25,400 on the Bank Nifty and above 10,300 on the Nifty.
Okay. So the call on the Nifty, I presume, Abhijit, with the supports and the levels that you're giving out, is if it dips at those support levels, you could go out and buy that.
Yes, absolutely. With the stop loss below 10,200 on the spot.
Okay, stop loss below 10,200 on the spot. Good call on Reliance yesterday, Abhijit. It kind of stayed sideways to marginally higher in an otherwise falling market. For somebody who took a position in Reliance yesterday, what should he or she do?
Reliance, as I said, there was a bearish engulfing candle 2 days back, but then Reliance is strong, and even on a weekly chart, it is only consolidating. So it is just, I have a feeling it is just waiting for a breakout. In fact, yesterday, as I said yesterday, above 935, it will be a breakout. It went very close to that and came down again. But then the moment it goes above 935, there will be big short covering Reliance, and it can go up by another 10-20 rupees very fast.
Okay, so watch out for those levels individually. A quick word on PC Jewelers before we take in your stock recommendation. I thought that stock stood out in terms of price movement, though the open interest addition, deletion, and the short covering thereof is slightly confusing to me, at least, Abhijit. What have you made of the positions thereof?
There was quite a bit of selling in the last couple of hours in PC Jewelers, but as long as 420 is intact on the futures, I believe it can go up further, and yesterday's selling might be just a blip. So watch out for 420 on the futures. Yesterday it has closed at 442. So 420 is a support where it might turn up again.
Okay. What about the stock recommendation for today, Abhijit?
One stock which held quite nicely even in the sell-off in the second half yesterday was HDFC. It is a buy near 1705, 1710 on the futures with a stop loss below 1695, and it can go towards 1740, and a close above 1745 it can go by another 40-50 rupees in the coming days.
Okay. So watch out for HDFC. It's a heavyweight. If it indeed does participate, then that could be good news for the markets by and large. Remember the last few days we had HDFC contributing as the top contributor on either the gainers or the losers, either direction, in an otherwise sideways market as well at certain times. Thanks a lot for that, Abhijit. Thanks for joining in today and giving us your thoughts. But it's not just equity markets, the commodity markets, which after having a few days of gains, I think, unless I'm very wrong, are a bit muted today. Though Pradeep Johnson to speak about that and to take the show forward. Morning, Pradeep.
Good morning, Neeraj. As we mentioned yesterday, the rally in crude was likely to be short-lived. We don't know whether the crude has actually reversed, but it indeed corrected from the 2.5 years high. Although earlier in trade, Brent went to 65.83, almost 66, and the WTI also went to 58.56. But from those levels, we have seen around 1.5 to 2% correction. So crude is definitely cooling off. That would be the signal for our markets in today's trade. And traders have been attributing this correction to profit booking at higher levels. However, fourth successive week of decline in inventory levels in the United States is likely to support crude on the downside. So I would say probably downside support is also there, but for now the signal is actually weak. Let's look at gold, and gold has been holding steady. It hit a low of around 1235.36 on Monday. Compared to that, yesterday and also this morning, it has been quoting at around 1240-45 odd levels, waiting for the outcome of US Fed, and I think it will move only after that. So probably we'll see some movement in gold late tonight or maybe tomorrow. Base metals have also closed mixed. Like you mentioned, zinc rallied, whereas copper, nickel both declined. Lead also moved up a bit. So there's a mixed trend overall, not the kind of movement that we had seen earlier. In Shanghai trade this morning, steel has dropped more than 2%. So that's yet another weak signal for steel sector coming in. So that is the overall picture right now. I think markets are really waiting for the signal from US Fed.
Well, yeah, I presume that's a fair assumption too, but more on that in a bit. For now, let's just pull up the Asian markets and show you what's happening there. A bit of red across the screen, but you would classify this largely as a flattish market in the session today. I'm really interested, Pradeep, in seeing what happens to the Nifty Bank today individually. I think we spoke about this in the morning yesterday with the bond yields moving up the way they did. That is an important basket to watch out for. Short build up there. Individual stocks, not the largest, but the smaller ones cracking a bit as well. Very, very interesting to see what happens today to that pocket.
Definitely, but even in yesterday's trade in the bond market, bond yields had corrected a bit, but there is a positive surprise compared to what market was probably factoring in. We were factoring in 4.7, it came to 4.9. So that would again be negative for yields, and maybe we'll see some jump early on in the day, and thereafter probably equity markets will take a cue from there. How bond markets really digest these numbers, and also core has moved up, so that could also be a worry. So let's see.
Yeah, so a bit of a negative surprise for sure, much higher than what the base estimate numbers were and then what the street chatter was as well. So let's wait and watch what happens thereof. In moments from now, our research team would be ready to talk about some individual stocks as well. So that is something that we need to watch out for. A clutch of earnings that came out, some key stocks in news, and of course some brokerage notes as well. So actually, well, if I'm told our research team is ready, so let's just go across to our research team and try and figure out what is it that they are picking up in terms of the biggest stocks in news in the session today. So Nikki, Somit and Shraddha join in with a complete analysis. Good morning to all three of you. Somit, of course, we've spoken earlier in the day as well, but let's start off with the results that came out overnight first.
Right, so disappointing set of numbers from two companies and healthy set of number coming in from Talwarkar Better Value Fitness. It's a healthy set of numbers that we're looking at least on the top line front. It's a 10% growth at 97 crore. Net profit has risen 25% year-on-year basis in this quarter at a number of 36 crore. Margins have expanded at 62% as compared to 59% that we've seen in the base quarter. Now, a higher revenue combined with the lower employee benefits expenses has led to a sharp jump in your operating performance. That combined with your other income has led to a good growth on the bottom line front. Other income has jumped as much as 5-fold in this quarter. We're looking at disappointing set of numbers coming in from Simholi Sugars and Nitesh Estates. The company Simholi Sugars net loss has widened to 34 crore as compared to 21 crore that we've seen in the corresponding quarter. And for Nitesh Estates itself, the losses have been widening for that matter at 37 crore as compared to 16 crore that we've seen in the corresponding quarter. EBITDA, the company is reporting an EBITDA loss at 7 crore as compared to 0.5 crore in the corresponding quarter. Goldstone Infra, now this is one bit of interesting counter, almost 600% the counter has rallied, but they're not a good set of numbers. EBITDA is margins have disappointed by coming in at 12% as compared to 19% seen in the corresponding quarter. Net profit, however, has risen to 7.7% on year-on-year basis in this quarter on the back of higher exceptional income.
Thanks a lot for that, Nikki. So watch out for Goldstone. More importantly, watch out for Talwarkars. What about the stocks in news? I thought Punj Lloyd stood out, but that was for me. I don't know for you.
Right, but there are a couple of them. First off, Interglobe Aviation, where the company's promoters will sell 79.5 lakh shares, and IG Mauritius will sell 32 lakh shares via an OFS. Now, the OFS floor price has been fixed at 1130, which is about 4% discount to yesterday's closing price. So we could see some negative reaction on Interglobe Aviation. Syndicate Bank's QIP is opened again. The floor price has been set at 88.57 per share. That's a 4-5% premium to yesterday's closing price. So we could see some marginally positive reaction there. Asian Paints will acquire 100% stake in Reno Chemicals for 159 crores. That's more from the perspective of acquiring land and building rather than buying a business. But let's keep an eye out on that name. Grasim Industries and Century Textiles will be in focus as well. Grasim will be paying a royalty of 600 crores to Century Textiles for the right to control its filament yarn business, and that will be for a period of 15 years. On the back of order wins, like Neeraj was saying, Punj Lloyd, 2 orders coming in, one of worth 276 crores from GAIL India, and another where its JV has won orders worth about 1200 crores in Myanmar. NBCC, again, order wins of close to 150 crores in Myanmar, so keep an eye out on both those names. Times of India report suggests there are 2 new buyers in fray to acquire Fortis Healthcare, Abu Dhabi-based VPS Healthcare, and TPG-backed Manipal Hospital. So keep an eye out for that name. Generally reacts. And Rakesh Jhunjhunwala has invested 180 crores in mobile gaming technology company Nazara. That's a TOI report. Why is it important? Because just recently IIFL had acquired a minority stake in the company. So I don't know if we'll see some reaction there, but that name as well to keep an eye out for.
Yeah, so that should be interesting. I mean, maybe at some point of time in the future, a big valuation game for IIFL.
They're looking at an IPO anyway.
Yeah, so let's wait and watch. It's got its hand in some of the right cakes, quite frankly. Okay, Somany, what else?
So we have a note from JP Morgan on this news that Bloomberg had broke that Reliance Industries is trying to list Reliance Jio. So on that, they're saying if the listing was to happen, then it would be definitely positive for Reliance Industries as it would allow a market pass discovery for the Jio business. Also, Reliance Industries has spent more than 2 lakh crore rupees on this telecom venture, and a potential listing would give some cash to the parent company, which would be positive. On the business of Jio, they are saying that Jio has delivered on key parameters like subscriber addition, and they have steadily added subscribers and have increase their reach, and they're expecting Jio to be net profit positive ahead of the schedule, ahead of their estimates in the third quarter of financial year 2018. Now, Reliance Industries stock price is valuing Jio at 13 times its FY20 EBITDA, according to JP Morgan, and according to this, the enterprise value of Jio comes to around 3 lakh crore rupees. Now, they're saying that going forward, Reliance Industries share price should remain supported by news flow from Jio that is coming.
Okay, let's wait and watch. Don't quite know if there will be a big impact on Reliance Jio individually at this point of time or no, but some of these individual names could well be in focus. Thanks a lot for that, Nikki, Sumit, as well as Shraddha. So those are some key stocks in news. Pradeep, I dare say you could argue that Interglobe Aviation could well be the one stock to watch out for. Punj Lloyd, it's a tiny tune now compared to what it used to be, and a fairly large order win in Myanmar, 1,200 crores. That's, even though it may be spread out over years, that's not a small number to work with.
And big two would be Reliance and Bharati, I suppose, and let's see how both of these also react to. But it's a news-heavy week, actually, for markets. If you look at it, today we'll react to inflation and IIP. Tomorrow we react to the Fed decision. Then exit poll on Friday, and Monday we'll react to the actual numbers coming from Gujarat. So it's going to be very probably volatile trade for next 3 to 4 sessions. Mukesh Singh, head technical analyst, Nila Financial Services, is joining us now on the show, and also Gaurav Bissa, derivative analyst at LKP Securities. Mukesh, how do you really plan to trade, till Monday?
Good morning, Pradeep. See, the indices were seeing a bit of an upward push in last 6-7 days, and that seems to have abruptly halted after yesterday's action. The pattern forming on the charts in Nifty from 15th November seems to be a bit of a running flat corrective in a wave 2 position from the high of 10,500. So this is a bit bearish pattern as far as Elliott wave is concerned. And as I have been often mentioning in this program, that we are seeing formation of lower top and lower bottom after almost 1.5 years. So this kind of price formations just prior to key event outcome is making me a bit unnervy. Maybe prices are having a sniff of what is about to come in the on 18th kind of thing. So I'm really focusing on this particular flat corrective to give an imminent and immediate push towards sub 10,000 area in Nifty. So it's a bit of a bearish cocktail getting formed on the charts. The key point as far as a stop is concerned is 10,410. So that's a bit of a positional stop as far as short positions are concerned. But for the time being, it seems to be a bit of a push lower towards the sub 10,000 area for Nifty in coming days.
Gaurav, are you also looking to short or right options at higher levels?
Good morning. For one, I am not an advocate of trading options that too ahead of the events, because if it turns out that markets for any reason go against you, then it can burn your hands very badly. So for now, if I look at the data, I don't see too much of unwinding happening in 10,000 put option in the Nifty index. And that was the case when it fell towards 10,030-40 last time in the series itself. So I think there can be a small pullback that we can see. Again, ultimately it might go down, but for a time being, if I don't see a data that shows that 10,000 is going to be breached that easily, I would rather play for a pullback. Same is with the case of Bank Nifty, wherein 25,000 put option has good amount of concentration. As long as Bank Nifty is about 25,000, 25,050 spot levels, I would not be shorting Bank Nifty. Rather, I would play for a bounce back. So I would buy out of the money call options in Nifty or Bank Nifty. Bank Nifty would be more lucrative because you get wild swings in Bank Nifty, and that can give you good M2M for a day or two.
Okay. So that's the broad call. Let's talk about some specific stocks. And Gaurav, I want to start off with your stock recommendations for the day. What are you giving out, and more importantly, why?
The first recommendation would be the stock has been trading in the range of 970, 990. If you look at the option chain, you will get a better picture over there. 1,000 call option commanded a very high concentration, and just be ahead of the announcement that there will be bounce back, there will be buyback of shares. Even before that, there was a lot of writing happening in 1,000 call option. It has also seen writing at a time when quarterly numbers were announced. So 1,000 has been a very strong resistance, a psychological barrier for many market participants. It is now comfortably closed above 1,000 mark. There's some sort of short cover that we have seen yesterday. A 2-3% short covering has been seen in futures. So now, if it sustains 1,000, 1,005, there's a possibility it may test levels of 1,045, 1,050 in coming days, which if sustained can lead to some more upside in next few trading sessions. So on that premise, one can have a stop loss of 995, play for targets of 1,045. Second would be a sell call that would be on UBL. UBL again has been finding strong resistance at 1,080, 1,090 levels, and some sort of short positions have been seen getting built. Yesterday, the selling was aggravated, and a 2% OI addition has been seen yesterday, given a breakdown on daily charts as well. So there's a cocktail of derivatives data as well as the technical parameters. When you can have a stop loss of 1,028, sell UBL for targets of 985.
Okay, so these are the calls, sell UBL and buy Infosys. These are the two stocks that Gaurav is recommending, one short and one long. Mukesh, what are your calls?
Pradeep, my first trade idea is to sell Tata Steel, and it is to be sold around 695. Stop should be placed above 704, and target on the downside. I am seeing a push towards recent lows of 670, 665 kind of area, which happens to be side of 100 days exponential moving average. So that offers a good risk reward opportunity as far as Tata Steel is concerned. Second stock, again on the sell side, it's an Ashok Leyland. It is to be sold around 115, and stop should be placed above 118. And target I am expecting a push towards 107, again the side of recent lows. So these are the two trade ideas on the short side.
Okay, two short ideas from Mukesh. Okay, let's wait and watch what happens. I think maybe we're a couple of minutes early, but it's a good time to get in our special segment, Bloomberg Edge, wherein we tell you about a pattern, the Jayesh tells us about a pattern that the Bloomberg terminal has thrown up. Today's stock in focus is HDFC. It's trading below the 50 and the 100-day moving averages as well. What is the indicator that you have for us on HDFC, Jayesh?
Morning, Neeraj. So I'm looking at the fear and greed indicator, which is a proprietary indicator by Bloomberg, which has given a positive signal on HDFC. Now let's have a look at how the fear and greed actually needs to be interpreted. Well, it's a spread of two weighted moving averages, which uses the concept of true range, average true range, and it oscillates on a zero baseline. So, it becomes very easy to decode how to, interpret the result of the fear and greed. So you buy when it turns from red to green, and you sell when it turns from green to red, and that is exactly what has happened on the chart of HDFC. If you can go back to the chart of HDFC, the bottom panel shows you the fear and greed, which has turned positive as of yesterday. So you can see the green bar that has come up over there, that has given you a buy signal on the stock of HDFC.
Okay, and what's the kind of accuracy level for this indicator, if you have seen it?
So it's accurate enough. Remember that this is a large cap stock and has quite a good weightage on the Nifty itself. The accuracy is about 15 to 16% in that range.
Okay, thanks, Jayesh, for this update. So HDFC is a stock to watch. I think Abhijit also recommended this stock. So maybe there is a very important technical move forming in HDFC, and we'll be watching for that stock. It's also important from the viewpoint of both the indices, Nifty and Bank Nifty. So we'll keep an eye on that. But we discussed Reliance earlier in the day. Bharati is the other heavyweight that market would be actually looking at. So let's see to what extent that will react to the deal.
Yeah, I don't know. It's a deal which is what, 200 and their share would be about 267 odd million from the 350 million that they're getting in. And from what I heard Somany say, that while you could argue that on certain parameters the deal is looking much better on the valuation front, I think if you just look at what the valuation parameters that Dish TV trades at, and there's a very good comparison chart that we put out in First Word. I think we should bring it up as well from the data that Somany had provided on the valuation parameters and what kind of premium the deal is done on different valuation parameters. I think it's done at about 2% premium to Dish TV. So it's not at a substantial premium as well. EV by FY17 EBITDA is just at a 2% premium to the Dish Videocon valuations as well. So not a dramatic premium, quite frankly, if you look at the valuation parameter that matters. So let's wait and watch. The money coming in is good. I'm just talking about the valuation. That's it.
Yeah, so that's the bigger strategy that they want to divest certain businesses and focus more or invest more on into the core business to kind of stand the competition from RelGeo. Gaurav, have you been tracking Bharti? Any important level to watch out for?
Bharti has seen a strong momentum, and seeing a crucial support levels of 490 around those levels. And if you talk of where it can head, if it sustains a breakout levels, and I think 535, 538 is the level to watch out for. If it sustains 535, 538, then we can expect another round of up move towards the level of 560. So I would be watching out where it exactly opens. If it opens with a 7-8% gap, then I think people who have bought at lower levels should be booking out their profits. And for somebody who wants to play fresh, I think 538 is the crucial level. If it holds 538, I think it's a good level to go long.
Okay. So let's move on. And ICICI Prudential Mutual Fund increased its positions in ITC and Bharti Airtel last month, while Tata Power and State Bank of India fell out of favor. Jayesh Khildani has drawn up a list of all the big buying and selling done by the mutual fund house in November. Jayesh, what are the details?
So Pradeep, their total equity assets now stand at just below $20 billion, and in terms of the sector exposure, financials constitute the most part of their portfolio, which is nearly 27%, followed by industrials. In terms of what they bought and sold in the month of November, some interesting trends coming out over here. Where the increased stake was ITC, this was the real standout, because I remember in the month of October they bought nearly 1.5 crore shares of ITC. And in November, they've added nearly 3.78 crore shares. So, more than 5 crore shares added in ITC. Bharti Airtel, yesterday we saw the other portfolio also added, shares, and they have also increased stake to the tune of about 3 crore shares. IOC, they've added about 2 crore shares, HDFC and L&T. So, all the large cap names featuring over here, where ITC and Bharti Airtel really standing out. In terms of where they have decreased stake, well, Tata Power, they've reduced stake, more than 2 crore shares sold over there. SBI, this was the interesting one, because they sold nearly 90 lakh shares in the month of October, and in November they have sold about 1.5 crore shares. So total 2.5 crore shares of SBI go out of their portfolio. Infosys, they have trimmed down their stake by 29 lakh shares. Lupin, they reduced by about 20 lakh shares. Yesterday we saw Neeraj on the chart where it was shown how the revenue growth has actually been declining for Lupin. So some of the reasons over there. In terms of where they have bought fresh and sold completely from their portfolio, if you have a look at that one, Bharat 22 ETF, now they are the portfolio managers for the Bharat 22 ETF, but they themselves have accumulated as much as 68 crore shares of the Bharat 22 ETF. HDFC Standard Life, of course, they participated in that IPO, added about 55 lakh shares. HCC and IGL, they've added about 12 lakh and 2.9 lakh shares. And Jet Airways was the interesting one, where they have bought fresh to the tune of nearly 1 lakh shares. In terms of what they sold, some of the new IPOs that have not done really well. Capacite Infra, they sold off their 2 lakh shareholding. MAS Financial also, they've sold off the entire. And Sarda Energy, Pratap Snacks, Voltas also go out of their portfolio.
Very interesting. Thanks a lot for that, Jayesh. So that's what ICICI Prudential Mutual Fund has done in the month of November. If you can just get that list of the large cap positions that they built or they got out of it, it's a fairly interesting thing that ICICI Prudential has done. Let's just get that list up on the screen. The large cap names that they've bought and sold, usually, or ICICI Prudential is, let me put it this way, at the forefront of sorts when it comes to buying or selling themes when they are out of favor. They've done it with metals in the past, they've done it with telecom in the past, but if you can see to this month, and then you kind of figure it out with what ICICI Prudential tried to do in the month of, did in the months of October as well as September, there's no large anti-consensus bet that ICICI Prudential has taken. Maybe there aren't any available in the markets currently which are truly anti-consensus and large, but there don't seem to be any large anti-consensus bets that ICICI Prudential is taking right now. The only one, if you will, would be a PSU banking space, but there too, if you can see, while they may have increased the stake sometime in the month of October when the news came out, and I think even then ICICI Prudential was amongst the sellers, they have been selling out of State Bank of India too. That 1.47 crore shares of SBI that they've sold out in the month of November out of a particular scheme clearly shows that they are not going out and buying into PSU banks in a big way.
So if you look at their even their banking fund, you'll realize that it's 80% plus private sector banks and NBFCs, or maybe larger, if maybe what I recollect is not exactly right. It could be up to 85 to 90%. So it's predominantly private sector financials. If that is the view on the banking fund itself, then you can easily assume, the other schemes would be hardly buying any PSU banking.
Yeah, I would guess that would be a fair assumption too. Okay, amongst the stocks in news today, I think we'll watch out for a clutch of names that will be reacting. I thought Bharti was one, maybe Punj Lloyd was another one which would be in focus as well. But in terms of stocks to focus on, Interglobe Aviation, a small OFS that might impact the near-term price. But just looking at all that's happening in aviation with crude topping 65.2, not showing signs of easing off right now. It'll be interesting to see what happens to the quarterly performances of these companies, because I remember, Pradeep, that in the July, August, September quarter, the average crude price was $51 or $52 per barrel in effect for these companies. One would presume that for the October, November, December quarter, there would at least be a 15% rise to the average crude price. You would presume that it would be probably in the 60 range, maybe more. You would be a better judge here. But if that is indeed the case, then even though it's a busy holiday season, the margin compression would come into play for the aviation stocks.
So we'll have to see to what extent have they been able to pass it on. But yes, true, since we have 58 to 65 kind of a range, and depending upon where are they buying from and what price are they really getting, I think our landed cost is close to 60, like you mentioned. So that would be still higher by what, 15-20% from the previous quarter.
Yeah, and such a crucial component is crude. That'll be very, very interesting to see what happens there. Jet Airways has been a bit volatile the last few days, up day before yesterday in a big way on the yield-wise note, down yesterday. Never mind what's happened over the last 13 months. Just a quick check out here, Mukesh, 20-second answer. Jet Airways, how does it look on the charts?
Neeraj, Jet Airways has been consolidating for between this range of 660 to 700 for last 5 days. So this seems to be a bit of a completely sideways activity right now. If at all, if someone is inclined to take a position, though the trend remains religiously up over here, the longer term trend remains up. So one can keep a stop placed below 650 and trade for the long pull towards 730, 735 kind of area. But mind you, this 700 is acting as a very stiff resistance in the stock.
Okay.
So let's see how the market are all set to open. In pre-open, 10,242, that's the level SGX Nifty is suggesting. We'll probably see a flat to negative open on Nifty this morning, and also Sensex and Nifty Bank. A few first quotes on Nifty coming in, 10,208. That is much weaker than what we were expecting. 10,200 remains an important area, I think, that most traders would be watching for. So 10,250, 252. That is the level that we are getting now. Let's look at what's happened to Reliance and Bharti, top two stocks that markets are going to look at. Reliance, after the news we had broken yesterday that our Jio IPO is likely next year. Well, RIL has opened actually down, slightly weak, down by 0.5%. We'll see what happens next. Bharti Airtel is the next stock to watch, is up marginally, just by 1%, so not much move there. Let's look at Punj Lloyd. Two big orders that they have received, 20% upper circuit. Would that happen? Well, difficult to say. Interglobe Aviation. So that is a likely offer here, offer for sale from promoters and also an investor. Stock is down 1.5%. Shrey Infra has got into a deal, so let's look at that stock. And also Century Textiles, as the news we have reported that Century is likely to get 600 crores from Grasim. So Century is up 2.5%. Two banking counters, Union Bank and Syndicate Bank. Union Bank has fixed the QIP at 154.50, and Syndicate has opened the QIP. So Union Bank's price is actually below the QIP price, and Syndicate Bank QIP is also opening. That stock is interestingly up by 10%. The price here is 88.50 odd levels, and the stock is actually quoting much higher. But let's see if it can really sustain 10% higher level.
Well, a clutch of names to watch out for. We've discussed all the key newsmakers. Just want to bring up the oil marketing companies once, and maybe Reliance Industries in particular, and see what's happening there. Today crude has come off OMCs after carnage yesterday, just showing a semblance of sanity, maybe not. Reliance Industries, which was holding out, should be an interesting one too. About 1/3%, 918 and counting. So this one is holding out. I must say it was a pretty good call given by Abhijit Phatak in trade yesterday. However, before we move any further, Saloni Dhanuka is joining us with the big brokerage calls for the morning. Saloni, good morning.
Good morning, Neeraj. On brokerages, first up we have India Infoline on Emphasis. Now they have initiated coverage on the stock with a buy rating and a target price of rupees 810, which implies a potential upside of 14% from the current market price. Now Emphasis is the 7th largest IT service provider in India, and they believe that after 6 years of suboptimal performance by the company is now in the middle of a turnaround in its growth and profitability profile, largely driven by improved technology offerings. Also, they believe that strong new generation deal wins and cost optimization strategy by the company will drive revenues going ahead. They expect revenue and EPS to grow at a CAGR of 10% and 12% respectively over the next 3 years. They also expect their HP business, which contributes 24% to their business, to grow at 13% CAGR in the next coming 3 years. While they also expect Emphasis to continue to distribute cash to its shareholders on a consistent basis, and hence they remain positive on the stock for a long-term basis. Now, second up, we have HSBC on Glenmark Pharma. Now, HSBC maintains their hold rating on the stock. However, they have cut the target price to rupees 625 from 700 rupees earlier. They expect no big ticket launches in the US, though 4 to 5 launches per quarter can largely offset the price erosion for the stock. Also, recent issuance of Form 483 by FDA to its Baddi facility in Himachal Pradesh remains a regulatory concern for the company, though this plant is relatively small and escalation of issues shouldn't materially impact existing US sales, according to the brokerage. Now, they believe that company's innovative pipeline assets are broadly on track, and however, what will be important to watch out for this company is how the company is planning to reduce its debt going ahead. Neeraj.
Okay, so these are two most significant stocks. Glenmark Pharma, where hold call is maintained by HSBC, but the target price has been reduced from 700 to 625. That's still higher as compared to the current market price. But look at Jubilant Food, hold maintained, target price has been raised from 1250 to 1640, but I think it's too late because stock price has already moved way ahead. So should it be positive for Glenmark? We'll see how that stock reacts to it or sustains at these levels. Mukesh, any call on Glenmark?
Glenmark, Pradeep, I'm just checking the charts. It remains in a kind of a downtrend, which is threatening to take the prices lower towards this 500 area. So, I mean, any pullback or any bounce back in this particular stock around 550 can be used to exit from the longs for a push towards 500 in the short term.
Okay, so that's the call coming in on Glenmark. Deven Choksey, director at KRChoksey Securities, is joining us now. Deven, good morning. We are all watching out at the reaction of Reliance. To what extent do you think this stock will start factoring in the IPO, which is probably at least a year away or maybe longer?
Good morning, Pradeep. Well, on one side, the Reliance has a clarification to offer that they are not planning IPO in a hurry. On the other side, I think we believe that the company has the inherent potential to go to the market and raise money. Well, I would think that till the time I think they need money, they will not hit the market, because I think they have sufficiently capitalized for the current project that they are rolled out, have sufficiently capitalized themselves. In my viewpoint, I think the current project that they have rolled out, I think could possibly first see 30 crore customers coming into the books, and thereafter possibly they may want to capitalize it further. That is what my take is, and the rationale for that is that in the current space, they have got probably on the network this many number of customers budgeted with the data volume traffic. If that is satisfied, then probably I think they should be hitting the newer expansion or add the expansion program, I think, into the system. On the other side, if you look at the major part of the capex required now, if at all, I think call it major, it would be in the integration to the front end. Already they have got the telcos, mobile telephony, I think, network already integrated. On the other side, you have the Wi-Fi network in form of internet. I think it is required to be integrated. the MVO and the DTH network is required to be integrated into it. So then this company would be a complete pipe company, and that's where I think the model is emerging into. That is probably that front end part of the expansion is not costing as much money as they have spent already into this business. So probably I think they would be comfortably spending that money from their own operations.
What are you doing right now with Reliance
they are
stock?
at enterprise value of around 2 lakh crores.
Yeah.
Well, we stay invested, Pradeep. I think we are not changing our view on the company. We stay invested.
Are you buying fresh?
During correction, yes. I think any correction of 10 to 15%, I think which is coming in between, I think is giving an opportunity to buy afresh.
Deven, the other stock in focus this morning, good morning, is Bharti Airtel. Any thoughts here on a deal that has been done, gets them about $250 odd million as well?
Yeah, good morning, Neeraj. Well, yes, I think anything to do with the deleveraging of the balance sheet and raising cash for putting in further amount of infrastructure as a backbone, fiber backbone, I think it's something which is important for Bharti, and that's what I think they're sensibly doing it. So in a way, I think it's a good move, as I may want to call it as. However, a long way to go. In next 2 years, I expect Bharti to incur significant amount of capex in building the fiber backbone, in building the connectivity to the larger network, which is 4G, 5G hereafter. So certainly, I think the Bharti is in the right direction, except that I think they would require higher amount of capex in coming 2 years.
What about Century Textiles, Deven? That's a stock in news today. I'm sure you looked at it.
Not enough, I think, not considered enough, I think, for the time being, Neeraj. So skip that particular question for the time being.
Do you like Punj Lloyd? They have received 2 big orders. One, the JV has received an order in Myanmar, which is 1,200 crore rupees.
In general, we have been liking, I think, many of the capital goods companies. Reason is that on one side, the one side, I think the entire infrastructure space is moving at a speed. Other day, I think the transport minister had to say one thing, that in order to bring the water from the Brahmaputra to the entire southern belt, probably I think they are going to put across the complete pipeline as against the canal water. Now this is going to be significant, because I think you put in such a huge amount of pipeline to provide the water for irrigation purpose is going to be, I think, requiring a massive amount of contracts or the projects for most of the pipeline companies or the pipeline manufacturing companies, and who lay down these particular things. So engineering construction companies probably would have a better time going forward. Similarly, we have been seeing this particular situation for many of the capital goods enablers, the infrastructure enablers in form of capital goods companies. They are significantly, I think, putting in the infrastructure for the for the growth, I think. So that is where I think these companies would come and have a role to play. Punj we have not seen of late, so would refrain from giving any specific answer to the company which you have mentioned.
Okay. 4 minutes to go, Deven, stay on. But just about a few minutes away from markets to start, so let's tell you all that you need to know to stay ahead in trade today. A clutch of names that you need to watch out for. Let's start off with Bharti Airtel. Warburg Pincus to invest $350 million to acquire 20% stake in the DTH arm, valuing the company at a premium, a marginal premium over Dish TV.
Interglobe Aviation, 2-day offer for sale starts today. Promoters and also IG Mauritius to sell stake via the OFS.
Bodhar Chemicals, Pratap Snacks, Everest Kanto, Prozon Properties and Shemaro Entertainment report results today.
Strong quarter for Talwalkar, while Nitesh Estate and Zimbabwe Sugar have disappointed.
And IIFL initiates coverage on Emphasis with a price target of 810 rupees, which implies an upside of 14% on the current price.
Sumit Industries, Siemens, Symphony and Shriram City are set to meet investors today.
So watch out for a clutch of these names. Remember, Prabhat Dairy shot up 20% the previous day as a result of that, maybe as a result of them meeting a clutch of investors. 205 currently. Watch out for dairy stocks. Watch out for companies like Repro, which corrected quite viciously in trade yesterday. These were all active movers which came off. The paper stocks came off. Very, very interested to see what happens to some of these companies in today's session. Deven, as a result of this Bharti deal happening, any rub-off effect on companies like Dish? And do you have any thoughts on the DTH space at all?
I think it's an important question. Yes, I think to a greater extent, I think we believe that this technology will its role to play even in the times when we are talking about a complete transmission happening through the fiber. Still, I think we believe that in a far off places, I think the DTH technology would continue to have its role. What I sense is that I think ultimately any network provider, be it Bharti or be it Jio of their size, they would probably integrate some of these networks like DTH network or a MVO network or a cable TV network, as you want to call it as, that is MSO network, I think, as you want to call it as. So each of these networks, I think, would ultimately get integrated with the fiber, and that's where I think the game is going to be played. So you acquire the number of customers, supply the content through whichever medium in which I think you reach the last mile. And finally, I think the business model so emerges out of it would be a pipe business model, wherein on one side you have got the fiber to carry the data on the ground, and I think the last mile connectivity could be through either fiber or could be through, I think, the mediums like DTH. So it will have an important role to play as far as the integration is concerned, and I would think that I think it's a sensible move on the part of Bharti to basically start taking some money out at the same time, I think, allowing this possibility to integrate themselves with the front-end network like DTH.
Okay, Deven, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us this perspective early morning.
Thank you.
But just before markets open, quick thoughts from our technical experts on that one top call for the morning. Mukesh, from your end?
Neeraj, I will go with Tata Steel. Selling is to be done around 695, stop 704, and target on the downside is seen around 670.
Tata Steel is Mukesh Singh's top call. What about you, Gaurav? Your top call for the morning?
Apart from the two I have mentioned, I would like to talk about Lupin. Seeing good amount of long additions after seeing some short covering. The technical parameters also quite strong. One can have a stop loss of 835.36. On the upside, targets of 870, 880 can be seen.
Just about 20 seconds left for the markets to kickstart trade. A buy and a sell call respectively on a large cap name coming in from both our experts. So thanks for that. The markets are slated to start off on a slightly tepid note, but you'd probably start off, say that this is a flat start. Large caps in focus today, Reliance, Bharti and a clutch of other names. So that's something that you'll watch out for, and watch out for the Nifty Bank and the banking individual names. As a result of what's really happened on the CPI front, but no undue reaction really. It's a flat start, at least for now. Let's wait and watch. The Nifty Bank starting to slip a bit now. Started off flat, now down about 60 odd points. So 0.25% gone on the Nifty Bank. It's pulling down the Nifty along with it, but it's the Nifty Bank that you should monitor today after having a sharp cut in trade yesterday. Let's see if it corrects further. For now, about 0.25% in the first 1 minute. Just quick check on the Nifty 50. The heat map, the broader markets have started off flat as well. The heat map should have a fair bit of red, I would presume. More red than green. Yes, more red than green. In fact, hardly any green, but hardly any losers as well, save for ITC, which is a heavyweight and pulling index off a bit. There are not too many large caps which are correcting viciously. State Bank of India maybe so. That's about it. Not enough gainers. Bharti Airtel topping the list. But aside of that, no, not really. I can't even spot Reliance amongst the top movers either direction. So that too is lying very, very dominant. Just a quick 3 or 4 names. As I said, Bharti Airtel amongst the top gainers, and that stock should be doing okay in trade. So do watch out for that. Watch out for Indigo. The OFS is priced at 1130, which is about a 4.5% discount to the price closed in yesterday. And Indigo starts off, or Interglobe Aviation starts off about 3 percentage points lower. Couple of other newsmakers, a strong Q2 for Talwarkars, but a flattish start, about a couple of percentage points. So nothing to write home about. A muted reaction. The Myanmar order win, more importantly for Punj Lloyd, not really the 167 crores here, but that 1200 crore win in Myanmar, probably adding some weight to this one. It's a tiny tune, but up about 11% in trade today. And last but not the least, from mine at least, Ad Labs, the Economic Times is reporting that the company plans to raise 650 crores by talking to PE funds. This stock is up about 3% in trade. Pradeep, what else?
So a few names, a few more names. Hathway Cable has gained around 4%. Monet Spath has gained roughly 3.5–4%. Parshvanath Developers has opened higher, 3.5%. Venky's is back in move, up 2.5%. And also you have Bhushan Steel, which is up around 2% in today's trade. So there are not many big gainers, at least in early morning trade. Both indices are actually down, whether you look at Nifty or Nifty Bank. So sentiments are a bit weak. On the negative side, which stocks are really correcting? Thangamayil Jewelry, Igarshi Motors, Ukal Fuel, Jamuna Auto. These are a few stocks that had gained over the last few days. And also, if you look at Jayaprakash Power, is down a bit in today's trade. Titagarh Wagon is yet another stock which has seen some profit booking. So there is no panic either, we can say, at least in the mid-cap space.
Okay, let's get in a very special voice. Deven Sangoi, CIO Equity at Aditya Birla Sun Life Insurance, joins us right now on the show. I don't remember the last time I spoke to you on any media platform, Deven. It's been a while that we've had your voice.
It's been a while.
Okay. So what have you been doing in this brief hiatus that you've had? What's been the analysis of what the markets are undergoing right now and what the near term could look like?
No, I think we are in the phase of consolidation. If you see the Nifty, more or less, it's been in the range of 3–4% movement. This is a phase of consolidation, but if you see the stock-specific movement continues to be there. So I think the markets are looking at surprise or the earning growth surprise, and they are fairly rational in rewarding where the performance has been above the market expectation.
So that's what's happening on the domestic front. What about the international front? Because I know you guys are putting in the money. You and mutual funds are the guys who are putting in the money. But what happens to international flows? They've been tepid. And if anything is to be believed, there are two big events that people are now worried about, at least people that I speak to, Deven. One is this Fed rate hike and maybe the series of hikes that could happen and the impact thereof. Two, if you believe that this whole taxation policy in the US has the power to pull in some money towards corporates in the US and thereby a natural flow out of EMs.
So if you look at right from the year, we have seen foreigners first time being net sellers.
Yes.
And it has never happened in last 8–9 years that foreigners been seller and the markets have gone up. So what we have seen is a vast change in the outlook, and I've been always optimistic. Optimistic as that the large flows of domestic, which were the investment flows, were moving only on a couple of asset class, either a fixed deposit, real estate, and gold. And equity ownership per household, despite of economic progress of last 15 years, has not been reaching the peak where we've seen. So it was a high time with gold out of favor, interest rates being low, and real estate returns obviously now pretty obvious that we haven't seen any return. People were left with no choice but to come to equity. And I think this story will continue for a meaningful length of time, and you'll see the domestic flow will be very good. As far as the foreign investors are concerned, we have seen that the market valuation as compared to any other emerging market or Asian market, they've been fairly high relative to what they've seen in last 10 years. So foreign investors have been a net sellers in India, and they've been buying either Chinese consumer, they've been buying Korean banks. So they've been buying things which are relatively cheaper with the same quality quotient. So I don't expect large inflows to come in India from foreigners. At the same time, the events what we are talking, I think the Fed rate hike has been talked. We've seen a very good recovery, and we will continue to see giving some kind of volatility, but I don't think so it's going to impact domestic flow. For domestic flow to impact, there has to be something, a Six Sigma event like a war with Pakistan or a China, or something politically going completely surprise to the market. So as of today, your fiscal is in good shape, political stability is there, reforms are happening. So I think everything good going. So we might go through a phase of consolidation, but overall, the long term looks pretty good.
So just one more question before Pradeep takes over. You don't foresee this US taxation policies changing in calendar year 18 to have any kind of material impact?
So it will have an impact on outflows on emerging market. maybe. But what I'm trying to say that today the domestic flows are so strong. You have seen foreigners selling in billions of dollars, and yet nothing has happened to the market. So as long as this market is dependent on domestic flows, as long as domestic flow sustains with a foreign or any kind of event which makes a large correction across global market will correct, but it will be temporary.
Okay. But are you worried about domestic bond yields going up? Because if you look at it, the private financials is the segment which has gained a share in the indices as well as in most of the portfolios. I'm sure the situation would be the same with in your case.
Sure. So I would say that we were expecting some kind of inflation pickup. We were expecting some kind of hiccups with GST. So what we have seen is, you've seen the inflation data came in yesterday, and I think inflation has really shot up. So there are components of inflation which are shot up. Again, GST is raising concern on the fiscal deficit. But overall, I am not too much concerned. The crude is one. We were expecting in the band of 60-65, but if it goes above 65 to 75 kind of band, then there are some macroeconomic pressure. I don't see the interest rate going up very fast. They have bottomed out. We have to see, and I'm very hopeful that as some of these proactive steps taken by the government, next year GST collection may surprise you, because they are not just trying to be setting up rules and seeing there are some flows and they are fast enough to correct it. So that adjustment process takes some time, but as you move and things settle down, and that we have seen with a lot of things, including demand. People were very worried what will happen with demand, but I think we have seen quite a stable economy and the recovery in the process. It's postponed the economic recovery, but I think we are seeing a lot of data points which are pointing towards a recovery beginning.
Okay. So say in 2018, do you really foresee a rate hike coming in from RBI, and will that affect the valuations in Indian markets?
So I would say the rate hike will depend on a couple of things. First, where the crude will be. Second, where the GST collection will be. As of today, I think this government is good enough in controlling the fiscal deficit, and we have seen time and time again. This year may be an aberration that you might have some slippages, but I think on the other side, you might see other, like you have ETF investment coming from government. The disinvestment side can, surprise you with HPCL going through, and the numbers can reach close to 80,000 to 1 lakh crore. So I think they've got a lot of levers in arm to, get the numbers right. So I won't be too worried as of today.
How have flows been for you, Deven, in the last, say, 3 odd months, and what are you doing with that money?
So we are getting ULIP flows, but for us, some of the old policies which are maturing, and we are seeing redemption, and that's the kind. So our AUM has been more or less stagnant on the equity side, but it's a mix changing for us. So I would say that we don't get too much of flows as much as mutual fund get, but we are getting a lot of long-term money. I think there's a good revival in Europe sales. The rules which have changed in 2009 and 10 are very pro policy holders. So people are really, getting to see the benefit vis-a-vis what was pre-2009. And this is a long-term money, and I think that will sustain. As I said, that there are enough pockets of opportunity. So if I get too much of large money, maybe the people who get billions of dollars, they have an issue, but as long as I get few $100 million, I don't see an issue. I think we still pick and choose the ideas what we like.
So where are you picking and choosing? I'm not asking you to name stocks, obviously.
Sure, so we have picked up, one area we have picked up is mid-cap technology stocks. Wow. I think there's a lot of value, high dividend yield. One of my fund has almost, which is based on dividend yield investing, called Value Momentum. We've almost got 15% in mid-cap technology stocks. So these stocks have very low valuation, high dividend yield, and we can see this turnaround is happening. And some of the stocks will get into more than a double-digit earnings next year.
So the story is still pending, you would say, because the stocks
I won't say it is
I
won't say that it is a broad brush, but you need to pick and choose, and we can see when we pick and choose, we can see the earnings will rebound very strongly, because the business has been completely changed to what it was a couple of years back, and there is enough opportunity for all these companies.
And the market has not priced that in completely as yet.
I would say that market has been ignorant. We have seen in last 1 month or 1.5 months, some stocks have given almost 30 to 40% return. But I think if you see FY 18 and 19, where the earning growth rebounds pretty strongly, because this is just a turnaround, and as you see, then I think there's more scope of upside.
And what do you think is really driving it? I mean, the mid caps doing much better than the last.
So again, see, some of these companies are in the range of $200 million to 800 million. They are quite small. They don't have baggage. They don't have so much of commoditized business. And if they had, they have been able to pare it down. So flexibility to change the business mix is quite, easily done as compared to the last guys. Second, they're focusing on the new technology, or they're focusing on the niche. And if you see, the digital spends have started moving up, and they've been moving up. So only the mix was dragging the overall sales. So we are seeing good cash flow, reasonable valuation, and growth coming back.
So you think it will sustain?
Yes.
Any other story that you have spotted?
So I think one area is we have seen retail is another area where I think organized to unorganized to organized is benefiting, and they are gaining market share. And we've seen every retail format, large, small, we've seen the market share gains happening and sort of a revival. So they've done a lot of work. So some of the retailers have significantly surprised on the earning front, and GST is also benefiting them.
So that was the story of 2017. Do you think it will work in 2018?
We see it continuing, because if you see the per capita income growth, we haven't seen the economic growth. This is just an shift in market share plus shift in. So as you see increase in the per capita income, increase in the spending, you see the accelerated growth. And this is going to happen because the market share gains continue. And we have seen some jewelry retailer, we have seen the organized retailer, and that is surprising market quarter after quarter. And not by, is by a huge margin.
Okay. Where are you not in line with what other large players would be doing? Mid-cap IT would be one, but I presume a lot of funds have now started getting in onto the act in mid-cap IT. So you were probably the earlier one. Some of the people have started coming in. So there is a train of thought which is constant there. Where is it that you are different from the rest of the market currently?
So I would
say
say
thought,
that,
if not action.
No, I would say that in this market, I wouldn't say a sector specific. I think it's much become a bottom-up stock. And you can see as you go in 2018 calendar year, maybe the sector won't do, but specific stocks in the sector will start. So I would say it is going to be a market where, in our view, that bottom-up stock picking will continue, and that will differentiate. And I'll give you an example. For example, in oil and gas, the marketing companies have not been doing well, but the gas companies have really done well.
Yes.
So I can't say that oil and gas is a bad sector.
Do you like city gas distribution?
We own a city gas distribution, we own other transmission companies, but again, I am telling you, as the earning triggers happen and a lot of, so you need to be proactive in putting the portfolios to the right stock within the sector. I don't think so a sector approach is going to work today.
Okay. Great. Deven, thank you so much for taking the time out and joining us today, and look forward to have you more on this forum as well.
Thanks. Have a nice day.
Thank you, Deven. All right, that's an important market voice, Deven Sangoi, Birla Sun Life joining in. The market's lying flat, about 0.25% for the Nifty Bank, but the other markets are lying very, very flat. We take a break on that note, but on the other side of that break, we talk with P.H.Ravikumar of Bharat Financial about business and interest rates and borrowing costs, and of course discuss the business outlook with Abhishek Somany of Somany Ceramics.
The Gujarat elections is where it all started 5 years ago, and where the next 5 years are going to spring from. Get in the loop. Join us at Bloomberg Quint's election coverage. Get the lowdown on everything related to this election. business to pure politics to the development of human capital. We've got you covered. Elections 2017 on Bloomberg Quint.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Welcome back. You're watching Indian Open. It's been 2 months since the Bharat Financial Inclusion and IndusInd Bank merger was announced. We're now going to speak with Mr. P.H.Ravikumar, Non-Executive Chairman of Bharat Financial, to talk not just about how that merger trajectory is moving along, but also how the business is looking on the ground. Good morning, sir. Thanks so much for joining us. Appreciate you taking the time. Sir, I'll get to the merger in a bit, but I actually wanted to first start by asking you how things are looking for the microfinance segment on the ground. I think the last quarter results had suggested that things are pretty much back to normal, but I'm wondering, since then, what is the kind of growth in the portfolio that you're endeavoring towards, given the fact that there has been a recent bout of volatility?
The microfinance industry has, as you correctly said, back on track. The disbursements are healthy. The industry can grow annually between 30 to 70% depending upon each organization's own growth plan and ability to manage operations in a manner which is conducive for quality growth in the organization. Bharat Financial Inclusion itself, we have been very clear. We have not revised our guidance that we have given to the markets. So we will continue to grow between 40 and 50% the book for the fiscal year 2018. The recoveries are well above 99, back to normal. The picture is different from company to company. Those who recognize the problem early, those who provided and took the hit on the chin early, they have recovered faster. The others are taking some more time. Having said that, there are 3-4 states which do cause concern. You have Tamil Nadu, which has no political leadership. There is a vacuum at the top, which I think is somewhat destabilizing for the entire economy in this state. You also have Gujarat, which for almost now 2 months is in an election fever, and that again is not good for ground level working. Karnataka is getting into a election mode. So barring these 3-4 states, I would say rest of states, it's business as usual.
Sir, 2 questions. One, states like Tamil Nadu have been high growth states in the past. So some of these states that you're mentioning, what is the Bharat Financial, what proportion of your portfolio is in these states? Secondly, sir, I understand that the industry may be able to grow 30 to 70%. You have a fairly large book already. So where is this high growth still coming in from? Are you going into newer geographies? I don't think that would be the case because you're pretty much present across the board, right? So if you're going into the same states, that whole over lending issue, are you sure that's not coming back, sir?
Yes. Let me say that we do not lend in both Gujarat and Tamil Nadu, both these states, and also Andhra Pradesh. These 3 states we do not lend. We are in 14 states. We will be probably 16, 17 states by the end of this year. Having said that, it is not that we are lending to the same borrower again and again. We do on a granular level, borrower-wise track the exposures. We have a very strict policy that if an existing borrower has 2 borrowings, then we do not lend to the borrower at all, including us if there is one more MFI which has lent. And or if already 2 MFIs have lent, we do not lend to such borrowers. The opportunity on the ground is large. The districts not covered by us are the districts that we are expanding. Bihar is one state where we are expanding well. We are also expanding in Madhya Pradesh. We are somewhat slow in Maharashtra. Orissa is another good state for us. Bengal we do selectively. Northeast we are still in the process of studying and will take us time. But otherwise, as you correctly put, we are pretty much across India. But the new lending is in new geographies, that is new districts in each of these states. There are after all 640 districts in India, and the opportunity on the ground is for us to take. If we can get our act of putting together people, our team, delivering the products as we have efficiently delivered elsewhere, and getting our technology right, there is no in the foreseeable future limit. You would know that all our disbursements are now through Jan Dhan accounts, and most of our recoveries continue to be in cash because we are only the MFI continuing to recover every week. We are hopeful that in the next 4 or 5 months we will solve that problem and also move to a digital based recovery.
Okay. Sir, a quick check on how things are shaping up on the merger front. In particular, I just want to get clarity on, what is going to happen to the sales force. I know it's going to go into that third entity, which was part of the merger agreement. But can you give us more clarity on, the sales force, the product, the positioning of the product? Will any of that change once the merger is completed, sir?
2 things. One is as far as the process is concerned, I think it will take at least another 7-8 months minimum for the process to be completed. We need approvals to begin with from Reserve Bank of India and from Competition Commission of India. Applications have been made almost 4 or 5 weeks back. It should take us another 3 weeks to get these approvals. Once we have these approvals, both the entities will go to SEBI because both of us are listed entities, and that should take another 6-8 weeks. Post this, we will go to NCLT. The NCLT approach is in 2 phases. In the first phase, NCLT will call for a meeting of the shareholders and the creditors for approval of the merger structure and terms. Post that approval from shareholders and creditors, then NCLT will finally take a call and notify the merger. I would be very surprised if this process is completed before June, and could be as long as September next year. The other is, insofar as products are concerned, we continue to, as of now, mainly focus on 2 products. Our regular 1-year product, which is repayable in 50 weekly installments, is the almost 70% of our total disbursements, and we have a 2-year term loan. Typically, the average outstanding in a 1-year loan is around 20,000 rupees, and the average outstanding in the term loan, which is the 2-year product, is about 35,000 rupees. Having said this, we have begun a foray into rural housing. Rural housing, of course, there are 1 or 2 challenges. The first is in relation to the title deeds. In most cases in rural India, the title to the land is inherited over generations, and it is possible from a legalistic view that some of the critical documents are not available. Where the title to the land is not clear, under the current regulatory regime, any loan to them for their own homes is not treated as a home loan. That, I think, the regulators are looking at ways of solving that problem. Till that issue is solved, even if we make loans for homes, it could be home improvement, it could be home building, those loans will be treated as non-home loans.
How big, Mr. Ravikumar, sorry, how big is this potential market for you? Any numbers you can put to how much you hope for this to be in terms of contributor to your loan book?
Market is See, market is very large. If I would say that the total, I would only look at the total NBFC and housing portfolio. You would be aware that the NBFCs today constitute almost 18% of the total organized sector lending in the country. They were 13% and they have come to 18% in the last 4 years, and by 2020 are expected to be 20% of the total lending. Of this, only 2 products, that is housing and vehicle financing, constitute 50%. And again of these, housing constitutes a third. I would say therefore, the opportunity is unlimited insofar as rural housing is concerned. We need to get the legal and the regulatory framework correct. I don't think at this stage, particularly with the emphasis on Pradhan Mantri Awas Yojana, there is a shortage of funds.
So, sir, just to stress on what Ira just asked you, and sorry, this is Menka, but where will that second level of growth come from? You know, if it is housing, then can you put numbers to it? If it is other kinds of products, can you give us some idea of where you expect now the next phase of growth to come from? And just to go back to your previous point that you made, that you're not present in Tamil Nadu and a few other states, do you intend to change that policy at any point in time and seek entry into those states? Gujarat, Tamil Nadu, and I think you mentioned Andhra. So.
No. This we would review only after the merger is through, because unless there is a complete political stability in the states, we have generally chosen to remain away from the states because there is enough opportunity elsewhere. In Andhra Pradesh, unless the APMFI Act is repealed, I don't think we are going to go back there and lend. The first question in regard to the size of the housing, I would say today, if you see the entire housing sector is almost 3 lakh crores, and even if I take 20% of it, which is about 65,000, is the total requirement of the home building in the rural areas. If you calculate it the other way, at least 2 crore dwelling units have to be built over the next 4 or 5 years in rural areas. Even if I take only 5 to 6 lakhs per dwelling unit in each of these rural areas, the opportunity is not less than 100,000 crores. Not that anybody is going to do it immediately. So the moot point is that we can pick and choose our borrowers. There are not many players in this area. Those who had forayed have faced difficulties, and we have those case studies as learnings for us as to what mistakes not to make.
I'm glad you make that point. So I'm sorry, I know this is getting into a conversation on rural housing, but you know, we were speaking to another company earlier, M&M Finance, which got into that segment. But I think it's very clear, even from what you're saying and what they were saying, that housing finance in rural areas is going to be a very different animal from housing finance as we know it now. So, you know, that assumption that this is going to be the lowest volatility segment will probably not hold true for rural housing, sir.
100%. I did not want to name them, you named them. So their learnings are very much there for us to begin from. And the two points are that the choice of the borrowers cannot be just on the basis of past performance, because the rural dynamics are completely different. The second is, in case of a default, the reality on the ground is I cannot take possession of the property. And if in one case who has defaulted, I don't take any corrective action, the others will be then encouraged to default. Something what happened in the recent UP and Maharashtra cases in microfinance, where some people were encouraged to default, and since no actions apparently was taken, the others also started defaulting, and it had a cascading impact. Therefore, we are not rushing into funding home loans, but yes, the pilot has begun, and we will learn as we grow. That is the model in each state. Even in microfinance we have adopted, and it has worked well for us.
Okay, Mr. Ravikumar, good morning. Neeraj here. One final question from my end at least. What happens to cost of funds over the course of the next 6 to 9 odd months? And based on what you did in Q2, would it be safe to assume that loan growth could nudge that 50% mark for FY18, possibly beyond, if you have a sense thereof?
No, we have been, if you see last 6 years, we have been very careful about the pace at which we grow. We wanted complete control on the operations and the recovery efforts. So beyond 50%, can we grow? We can grow. Will we grow? Unlikely that we will grow beyond 50%. Our guidance is around at that figure, and we don't see any problem in achieving that figure. Insofar as cost of funds is concerned, you are aware that at least for next 6-7 months, there is no hope of any rate cut, because till these higher inflation figures for the next 6 months become the base for next year, and hopefully the next year the monsoon is good and production figures are good, and some of the supply chain figures, particularly in vegetables and eggs and milk, are resolved. There is no room for regulators to look at reducing rates of interest. Having said this, you would be aware, I think, that in the last 1.5 years, one major feature on the liability side of all NBFCs in general and microfinance institutions in particular has been that we are accessing markets directly through bilateral placements. Like insurance and mutual funds have emerged as large takers of our paper. NBFCs today, including securitization, 60% of their liabilities are coming not from banks. It is coming from direct NCD and paper issuance in the market and bilateral private placements. We will continue to see that. Having said that, given the fact that microfinance institutions are the only segment where lending by banks to microfinance institutions is classified as priority sector, we are not seeing a difficulty in flow of funds insofar as banks are concerned. The cost of funds is what is critical. The larger ones in microfinance institutions are able to manage their costs of borrowing well as their operating costs. So they will continue to have a healthy spread almost at the upper end of the margin allowed by Reserve Bank of India. But the smaller MFIs, they have had issues because recoveries have taken a toll, and unless the balance sheet come back to normalcy, banks have been slow in coming back and lending to them. I would say that NBFCs in general and microfinance institutions in particular, asset side is not an issue, liability side is emerging as an issue.
Okay, we'll leave it at that. Mr. Ravikumar, thank you so much for taking the time out and joining us today and giving us some guidance about what you could do in the near term as well. No key decisions on venturing out into states which they are not present in until the merger is out of the way or completed. I think that one point came out as well. The other discussion lined up for the day is from a home improvement space. Remember, these stocks were very active yesterday. They've been active for the past few months as well. Edelweiss came out with a very interesting note on this whole space and their view on Somany Ceramics, amongst others. While it remaining the third largest player in terms of capacity and second largest in terms of profitability, is that they are bridging the gap with the leader in terms of margins and valuations. And maybe the second half could be much better than what they've seen in the first half. So let's get in Abhishek Somany of Somany Ceramics to talk about what could the next 6 to 18 odd months hold for the company. Mr. Somany, good having you. Thanks so much for joining in. You're getting into ancillary segments as well. All of this coupled with this tailwind that we are possibly seeing in affordable housing and housing at large, does this augur well for the company in the second half and possibly for FY19 as well?
So I think the second half is still going to be difficult with the GST overhang still with us, and what is going to be important to see is that how we pan out the compliance part of it. So on one hand, they put the GST. So we had an issue with the pre-GST era and then the post-GST era, and then 28% went to 18%. So practically the first 6 months, in fact up till 15th of November, it was kind of a washout for us. Going forward, I think although on one hand we welcome the change of 18%, but on the other hand, the government has to take very, very stringent steps on compliance, because if the compliance is not in place, it's a free-for-all situation as of now. Evasion is absolutely at the hilt. It's never been so bad as we see it. So I think compliance has got into needs to get into place. Only after that we will see over time that this shift more aggressively towards the branded segment will happen. And we being now the second largest both in terms of value and volume will be the largest beneficiaries.
So you're saying that this overhang has not gone away. I mean, I believe it's been 20 days or 25 days since that announcement came about. The shift towards branded with the lower GST rates has still not happened. You're not seeing it on the ground.
I will see it on the ground, but on one side, if you put a tax rate and on the other side nobody is paying it, then how would this shift happen? So I think the compliance has to get into place, which is currently virtually not there. The e-way bill also we were expecting 1st of October, which has got delayed to 1st of April. That will be a big help towards one step towards compliance. But I think at 18% over time, we will see more and more people getting towards paying taxes and in the tax net. But provided the government cracks the whip on them.
So, okay. So then tell me, are you saying that unless these things happen, the natural tailwind of business is not good enough to revive what arguably has been a slightly washout first half for you as a company?
Obviously the second half is generally better, and for us it would be better too, but the kind of tailwind which we would have expected because of GST coming to 18%, that is not going to be felt at 100% because of the compliance not there on ground.
But natural demand supply, Mr. Somany, I mean, if I look at almost all reports that come out from the sell side, or if I speak to buy side investors as well, everybody has one story to say home improvement is the next big thing. Demand is going to pick up, irrespective of what happens in terms of teething problems or otherwise. Volumes will pick up. You are not just present in your segment as the second largest player, you're also embarking upon newer products, I believe, faucets and some of the others. You don't think demand itself will take care of a lot of these other issues?
No, so I'm not arguing that at all. On one side, the government has taken a large initiative of Housing for All 2022. On the other hand, we have India, which is urbanized only up to 32%, and we are going to be only making more houses to get urbanized in the next 10 years to maybe 38 to 40% of the population. So nobody is arguing the demand side of it. I'm talking very, very short term. In the extremely short term, you asked me for the next 6 to 12 months. In the next 6 months up till March, there is going to be a little bit more pain. But overall, nobody is arguing on the demand. The demand side of India is extremely buoyant, and if you see on one side, I am saying all of what I've just said, but on the other hand, we've just expanded 5 million square meters of capacity, which has resulted in a 2.5 million net increase in my Bahadurgarh, in my Haryana plant. We're expanding another 5 million square meters per annum in May in one of our joint ventures, and we're expanding another 4 to 5 million same time next year in the South India. So on one hand, we're clearly gearing up for that demand coming through. So nobody's arguing on the demand. It's only the very short term where the pain is felt. And your specific question was for the tailwind for the second half. The tailwind for the second half is not going to be as much as what we have thought. But the home improvement space going forward, whether it's sanitary ware, tiles, bathroom fittings, etc., ply, paint, all of that is going to grow with the growing demand of more urban India and more houses being built. Also, commercial and government spending is up.
Okay. Are you, for your own business, are you trying to bring down the percentage of revenue that you get in from JVs vis-a-vis your own organic revenues? And what's the quantum or what's the bifurcation currently? Are you looking to change that? And if so, what's the target over the course of the next couple of years?
So we have three segments. One is own manufacturing, which is about 40%. Then we have JVs and non-JV partners. Most of it is in the JV hands. That's another 60%. I don't think this would change very much. It would be between the 55 to 65 range as far as JVs is concerned and the non-JVs are concerned. That depends on a year where we have a green field or a brown field in our own manufacturing versus a green or a brown field in the JV manufacturing. So I think this model is working very well for us. And a 60-40 ratio ratio between own manufacturing and outsourcing, be it JV or vanilla outsourcing, would be a fair estimate going forward, at least for the next 2 to 3 years.
So having spoken about all of these, tell me if these assumptions that most people have for the sector at large and for Somany as a company, until FY20, a compounded annual growth rate of 14 to 15% on the revenue front, and EBITDA performing much better because the margin picture will improve for most companies, including yours. Are these reasonable estimates or are these bullish estimates?
I think I can talk for myself. I think for us, there's a lot of catch up to be done on the value added front and all the product mix front. So I think we would be bridging the gap between industry leader and us in terms of margin. I don't see we would catch up completely, but we would bridge the gap a couple of basis points. As far as the revenue estimates are concerned, too early to say, but I think by FY19 we should be again inching back to the early double digits and moving forward from there.
Fair call. Abhishek, Somany, appreciate you joining us and being candid enough to speak about all of the numbers and the teething problems as well. All the best for the second half. Well, if brokerages believe that all's hunky-dory, clearly managements don't think so. And Somany Ceramics in particular, not completely bullish about the second half and cautiously optimistic. I would believe that's the tone that came out for FY19.
Yet if you want to build on, if you want to bet on the whole home expansion sector, I think home improvement and this is one of the top 3 companies in that space, are your only options. I mean, who else? You either bet on a developer, that's never a great idea, not necessarily always.
Yeah.
Or you build on an NBFC and you look at that. Or you build on something like this where you know that demand can only increase in this country. And as formalization takes place, these guys stand to gain the most. Whether in 6 months, 9 months, 14 months, 20 months, right? I mean,
and valuations are not that expensive.
Yeah, and it's what? The second or third largest player in the market.
Second largest,
so.
yeah. At least that's what he said, yeah.
Yeah.
Okay. Markets lying absolutely flat though, but I'm sure the FNO show will figure out a lot of stocks to talk about. The Nifty Bank, about 0.25%, maybe the damage was done yesterday. The Nifty 50, very, very flat. So no great moves ahead of a key event, which is the Fed decision.
The 10-year yield though up to 725.
725 from 7.
So another 5, 6, 7 basis points up.
Yeah, okay. So that's maybe the thing to monitor. But for now, we wrap it up on this leg of Indian Open. Up next is the FNO show. Do stay tuned for that.